Scott Bozzo did not need to open up the latest report to know much of what it would show. He knew California's farmland values have been falling. The question is whether those values have fallen as far as they're going to go right now. Hi, I'm Dave Price, and this is the American Farmland Owner Podcast. Scott is the reigning Farm Manager of the Year in the state of California. He's the president and founder of Macotera Ag Group in Fresno, and he's also the co-chair of the state's American Society of Farm Managers and Rural Appraisers 2025 Trends in Agricultural Land and Lease Values Report. That's why he really knows this data. Now, he also knows water is a big factor in what is happening with farmland values. He knew this was coming. He predicted it, and it has happened. We're going to discuss this in a little while. Also, the impact of bankruptcies in the state of California. First, though, how this guy who grew up surrounded by agriculture now surrounds himself with California's agricultural diversity. All right, start us off. How'd you get to where you are?
Yeah, so I was born and raised in Fresno, California. It's in the middle of the Central Valley there, surrounded by agriculture. Been around it my whole life. Actually, my dad's side of the family, they were farmers up in Yuba City, his uncle and another uncle actually in the Gilroy area. And he chose the route of going into ag finance. And so as a kid, I remember riding around with him in the truck and going to look at different farms and whatnot. And so just was always around it. I knew I had a passion for real estate. And so in college, I went to Fresno State and decided that I wanted to do something in real estate. And the ag group they were my people. You know, I was like, I could look at the commercial side of things. I knew I didn't want to do residential real estate. And so just always been around ag, always had a passion for it, always enjoyed it. And so it was just one of those things that out of college is like, okay, that's where I'm hopping in and that's where I'm going. So ended up doing a couple internships on the finance side of things and on the equity side of things, and kind of decided, well, maybe I shouldn't do exactly what my dad did, do something a little different. And so I've been in the brokerage equity side of things my whole career, and really enjoyed it so far.
Most of the clients and partners you work with are whom?
Yeah, so mostly institutional investors. You know, when I was a broker, there was kind of like the big four at that time, what I called them were, you know, Prudential, Hancock, Westchester, and UBS. But now that institutional investor space has exploded. So right now that's what I focus on. I do consulting work for lenders as well. And then, you know, your standard farmers that might have questions on different projects or whatever, that maybe it's a family going through a sale process, maybe there's a life estate type question that they just want to try to figure something out. Maybe should we redevelop, should we not? So we do a little bit of everything, but our main focus is that institutional space.
California is so unique compared to some other states. You know, we can pick out certain regions, maybe especially in the Midwest, where it's almost exclusively corn and beans, right?
Yep.
And maybe not completely statewide, but for the most part, you can really specialize in a region that way. Man, it's pretty hard to view California that way. As we look at California is like almost its own country.
It is. And so California Ag, I think, is number one. I know it's number one in terms of production. And then we're almost double the output in terms of gross revenue for number two, which is Iowa. And I think if you combine three counties in the Central Valley where I was, you know, Fresno, Tulare, and Kern, that would actually rank number two behind the state of California. Without. So, you know, people don't think of, they think California with Hollywood or the Bay Area, but it is a powerhouse in agriculture for sure. And it's an incredibly diverse. We grow over, I think, 400 different types of crops commercially here. And so you have everything from like down the Oxnard plain where you have early season strawberries, berries, vegetables, to almonds and citrus and other crops that are grown in the Central Valley, other sorts of tree fruit, cherries. You think of it, we grow it in California. We have a huge rice footprint in the Sacramento Valley, and everyone knows, Napa, Sonoma for their wine and everything in between, right? So it's a hugely diverse thing, and if you're in California agriculture, you can't be bored. One of the things I love doing is I could look at literally vineyard in Napa one day, and the next day, be looking at a solar project down in Kern County, and the next day a strawberry deal in Watsonville. Right? I mean, it's just like you kind of have to know a lot about a lot of different aspects of agriculture and what those different pain points are. But it is extremely diverse is the easy way of putting it.
And we're gonna dig into some of the land value trends here in a couple minutes, but because of what you just mentioned, people are going to come to you and expect you to be expert in all of those things you just mentioned, right? How is that possible?
That's a great question. There are a lot of experience, I try to do a lot of different things to keep sharp. But sometimes I feel a victim of what's that saying, like jack of all trades, or
Master of none.
master of none, exactly. And so, yeah, it's interesting because I feel like one of the things we try to bring in terms of value with my company is we have to be able to speak the language and be able to be that interpreter, right? I have to be able to talk to a sophisticated winemaker in Napa about the struggles that they're going through and what that winery impact is doing. But I also need to be able to know like the nuances of this persimmon farm that we have in Kern County and how we're hitting the early market and what that really looks like, right? And so they're very, very different things. And so when you have a diverse portfolio to work on, that really helps, right? Because if you're just focused on one crop in one area, yes, you can be the expert in that, but it takes a different skill set to know a lot about a lot of different things. And so over the course of my career, I've worked for multiple different firms that do have diverse portfolios, and that helps a lot. As we talked about prior, I'm a big into our California chapter of American Society of Farm Managers and Rural Appraisers. So that network is huge. And so if I don't know something, I try to tell that to the client right away. It's like, hey, I don't know this, but I know 3 or 4 people right now that I can call and get the
Hmm.
answers. And so that's a big component of that. And then I also co-chair our trends publication, which is a fantastic. I mean, we kind of joke that it's the Bible for your California ag values, right? That you can literally flip open that publication and look at it, and you can see as a general value trend what your vineyard in Napa is doing, or what that pistachio farm in Kern is doing, or what your rice farm up in Sacramento is doing, and everything in between, right? And so it gives the reader a good snapshot. And so being the chair of that publication helps with my other colleagues, that we kind of get to sit there, and it's not just me or 2 other guys. It's a huge organization that really helps contribute to that. And so that helps give us a unique seat at the table to be able to discuss and learn and see what's kind of going on in these various sections of the state.
So talk about that trends publication. So because of the role you're in, you're privy to a lot of data as all of this starts coming in. Was there something that surprised you, or had you been living it enough where you felt maybe empirically and anecdotally it was headed that way?
Yeah, I mean, my unique seat with both trying to deploy capital and acquisitions and then managing existing portfolio, with that diverse portfolio that I discussed, it does allow me to kind of see what's happening more on the front lines, if you will. But there's certain segments of the market that I'm not as in tuned in, and so it's interesting to hear. Like, I don't currently manage, say, a lemon farm in Ventura County, right? But I do manage other lemon farms in other parts of the state, but that segment of the market might be a little bit different of what's going on. So you could kind of see it coming, you could feel it, you could discuss it with brokers, other landowners and whatnot. And what's interesting is you can see, everything is very cyclical, as you know, right? And so you could see different trends coming at different times for the different commodity groups. So Walnuts, for example, were a crop that had some pretty rough goes in the last handful of years. And so, but you could start to see some light at the end of the tunnel. And you could start to kind of feel that things are starting to turn around a little bit. Almonds are just a little bit behind that, right? And now like wine grapes are even just more on the front end of it. So we'll get into that a little bit later, I know, but you could kind of guess where it's going. And the big thing with our land values are no different than other parts of the US, that our land values lag commodity prices, right? And so when you've had multiple years of rough commodity prices, it's going to start to, it's going to start to show up on the balance sheet, right? And you're going to see some pretty massive impacts. And so we kind of saw that coming. So what I did when I was presenting the trends at our annual meeting was I broke down, I want to kind of everyone to see a big picture of what this really looks like and how this is hurting California land values, right? And so we have roughly 8.5 million irrigated acres in California, right? And I conservatively took a hit of 10 grand an acre across the board. Because we have land to sell for less than that, but we have, vineyards in Napa that sell for $500,000
Sure.
an acre, right? So it's everything in between. But if you take that 8.5 by your $10,000 an acre, you start to get in the teens of billions of dollars of losses. That's real, right? That's hit the balance sheet, and you don't see that in the Wall Street Journal. You see it when the stock market corrects and they say, oh, well, America's lost this many trillions of value or whatever, but no one points it out for the farmers. And I wanted to bring that to light because it is real, and it doesn't matter if you're an institutional investor like myself that manages his portfolios, or if you're a farmer, like it's still hitting your balance sheet, or if you're a lender, it's still hitting your capital requirements and where you feel like you're at with some of that stuff, right? And how that's going to impact whether you can make new loans or not. And so it was a pretty big correction that's been brewing. But it's also created some tremendous opportunities too for deploying capital and buying stuff, right? So it is interesting times to say the least right now for California ag.
When you say that it has been brewing, very early on in the report, you use the word inevitable, that you could see this trend heading that way, and there would be several kind of key factors leading to that. And maybe the best way to get into this is maybe we're going to have to go a little deeper dive into a few of the different industries, because you've already pointed out how diverse the region is. Maybe start with, what's your assessment of walnuts right now? So it looks like that maybe that's got a little recovery. If we go back a number of years to the first Trump administration, that's where that tariff situation, the trade war back then, I mean, they struggle with exports, right? And then we've seen some producers decide, man, I can't make a go of this, and just kind of get out entirely. What's your experience with it?
Yeah, so there's been a few things, and so the main, I don't even want to call it pain point, but problem with walnuts, if you will, is China effectively they switched from being a net importer to a net exporter of almonds, or excuse me, of walnuts. And so with that in mind, I don't know too many American companies in general that want to compete on a low cost basis with China on anything, right?
Yeah.
And so if you're I don't care if you're making cars or you're producing walnuts or you have to then pivot from no longer low cost, but now you're trying to pin yourself down to quality, right? And so that was a big problem when one of your export market completely goes away and then effectively turns into a competitor. That was a big thing that hit the walnut industry. The other thing with walnuts is they have a long useful life. So a lot of these permanent crops, they have different life cycles, right? Pistachios, there's 100-year-old pistachio trees, and they can go forever. Walnuts are you probably get 20, maybe 25 years of good solid production before you need to, redevelop those trees, just get too tired and move on, right? Walnuts are going to be somewhere in between, right? The little joke was you plant walnuts and pistachios for your grandkids, not for you, right?
Yeah.
So, that makes the supply very sticky, because you don't have the motivation to move on, or you don't have the it's not like the trees tell you when they're done. You have to kind of tell them when you're done. And they're extremely expensive to put in, right? And so, all of those things increase the supply. You had good economics for a while. Walnuts are usually pretty cheap to farm. And it's kind of the old saying is you never put it past a farmer to overproduce a profitable crop, right? I don't care if it's corn or walnuts, right? It's going to happen eventually, or
Yeah.
dairy or whatever it might be. And so that's kind of what ended up happening. And you had an oversupply. The price tanked down to like 30 cents a pound. And guys just they couldn't make a go of it anymore. And you have walnut orchards that are selling for sometimes below the value of open land, right? Because there's a cost attributed to removing those orchards, and growers are just like, what, I don't see, maybe you're losing that same amount of value just farming those orchards every year. Maybe you're not, but in some cases you were. So growers are just like, what, it's time to cut bait and get out, right? So, but recently, there's been lots of orchard removals. There's been very little new developments going in, and that supply has started to come back into balance. You had some quality issues too with crops a few years ago that so hurt their ability to move it. But the walnut industry has done a good job of starting to right that ship and starting to turn it around. And some of the orchards we managed last year were profitable, and I couldn't have said that for several years in the past, right? So it's definitely had its licks, that industry, and our orchard values, rebounding and going through the roof. No, they're not, but it was good to see some positivity for that industry last year, and kind of making its way out of where it was.
Did your firm have any, were they involved in anybody who decided to get out? And if so, was there something that kind of sticks in your mind about what they transitioned to? Because you talked about how, I mean, it's so difficult to, because of the long, laborious, and expensive process, it's not like you can just on a dime switch to something else. Is there anything you've dealt with and something that across the board folks are going to?
Well, I would say it's a good question in that there was a long time when I could argue there still is a question of what do you plant today
Mm-hmm.
if it's in California, if especially in the Central Valley, if what you have is not profitable or not, not economic, right? And so, it kind of depends on the region and where you were, right? Like if you have walnuts that were down, and say there's a lot grown down in the South Valley, like Tulare around Visalia and whatnot. And the flip side of that, there's a lot grown up in the Sacramento Valley. Well, Sacramento Valley is known for rice and other things too. So like you're not going to do rice down in Tulare, right? If you're ripping out those orchards. I mean, I guess you could, but you're probably not. The climate and soils aren't conducive to that. And so, my guess is a lot of those orchards were transitioned to something different, maybe pistachios, maybe almonds. It kind of depends. In some instances, guys maybe sat on their hands, or switched to row crops while they were waiting to kind of figure out what they wanted to do. So I
Sure.
don't have a silver bullet answer for that one. You kind of saw a lot of different things happening, but yeah, it was a difficult time, and it still is, because you're like, okay, what do we plant now? Because it is a 20 plus year decision, and it's a very expensive decision too.
And that short term, that's just magnified your expenses because you're clearing all that out and then you got to wait.
Yeah, yeah, and so, when we talked about the useful life of those orchards,
Mhm.
walnuts are similar to pistachios, and they're not going to be productive right away. An almond orchard, you're going to get a crop in the third year. Now, it's not going to be profitable. That fourth year, you're maybe breaking even. I mean, it kind of depends obviously on price and what your yield is really
Sure.
going to be. But walnuts, you're a few years down the line. So not only are you pulling out that walnut orchard, let's say, if you wanted to go back into walnuts, you're 6 plus years until you're back to full production, and who knows what the price is going to do then, and everything else. And not only that, but you could be easily in the 15 grand an acre range to redevelop some of these orchards. And so when you look at that and you're like, okay, well, maybe my ground's going to cost me 15, 20, 25 grand an acre. I could be into this orchard easily for 30 grand an acre. Why should I redo that when my neighbor down the street is selling his walnut orchard for less than open land value? If I want to stay in it,
Hmm.
why go that route? And so there's been several orchards and multiple commodities that have sold under the cost of replacement right now in California, but that just goes to show you kind of where the market cycle is kind of dipped to.
I'm kind of fixated on nuts, to be honest with you. This whole protein craze that our country is going through fascinates me about whether there will be some kind of surge in demand for nuts within our country, especially as we look at maybe some of these export opportunities could be challenged at least, if not permanently challenged. What are you seeing with almonds and pistachios then?
Yeah, so the almond and pistachio industries themselves, I would say, have been amazingly good at pushing the health benefits of both of those products.
Hmm.
There's a lot of marketing that goes into that. There's a lot of market research that goes into that. And yes, that does help. There's the flip side of that might be the wine industry, which we'll probably get into a little bit later, where people are just saying, okay, well, maybe I just don't want to drink as much, or I'm going to drink less, or I want lower
Hmm.
alcohol, or whatever it might be, and that has hurt the wine industry. The positives of that have been reaped through through the nut crop industry. And in some fashions, it could be seen as a water saving mechanism, right? Like if I'm getting my protein from nuts instead of from beef or chicken or other things, like, you could argue it's a more efficient use of water as well, right? And so all of the health industry craze that has been going on domestically has certainly helped consumption. But the vast majority of both of those products are still exported, and so it is an export driven industry, and both of
Hmm.
those almonds and pistachios are, and will continue to be. But I see that being a good sign as well. Like you look at the country of, say, India, where you have a rising middle class, and they want
And a
to
billion people.
and they have more money now, right? And so
Yeah.
what are they going to spend money on? They want more protein in their diet, and if
Hmm.
you can get that cheaply through a product like an almond or a pistachio that's relatively easy to export, and it has a good shelf life to it, it's a great alternative. And so there's a tremendous opportunity there to grow exports as well for the health benefits, right? Not just in terms of leading to more consumption or whatever, but the health benefits internationally I think are going to be seen just like they have been domestically.
So are you seeing the institutional investors intrigued by almonds and pistachios or not yet?
Well, that space, I mean, they've been in it for quite some time,
Hmm.
and it is very cyclical too. And so institutions have owned large, swaths of orchards of all three of those: almonds, walnuts, and pistachios. All those three nut crops are in different phases in their development, right? The pistachio industry is relatively newer; it's much bigger than the walnut industry. But those pistachios take a long time to come to production. You're not reaching full production until maybe years 8 to 10, right? And so it takes a long time to wait, twice as long as almonds. And so you have kind of this, I don't know if you want to call it wave or this shadow of supply that's just, sitting out here in non-bearing acres in the pistachio world. And that has a lot of people worried about what the price of that nut is going to be going forward when all of this supply comes on the market. What are we going to do with it, and how that's going to look like? Currently, the pistachio market is very healthy. We had a light crop last year, and so that has led to a very tight supply of pistachios going into this 2025 harvest year. Um, but it still remains to be seen what that's going to look like for 2, 3, 4, 5 years down the road when the supply does hit the market. How are we going to move these pistachios? And so there's good leadership there, and there is a known situation out there in the pistachio world of how we're going to have to fix that or solve for that. And so opening up those markets like in India or Middle East or whatever are going to be ways that you can help kind of move that product through the system.
I'm pretty sure my family of four eats our body weight in pistachios every week. So
That's
perhaps
good.
we can make up for any short-term export challenges.
Yeah, yeah. Well, domestic is a big one, right? And it, and as long as the domestic market is there, that's going to be a positive. And they're doing new things with, all the different nut crops, right? There's
Hmm.
almond milk now,
Yep.
pistachio ice cream, or whatever it might be, right? And so different flavors and different things. And so I think all of that is a good thing for product development, and hopefully that increases demand and that trickles down to the farm gate for sure.
Okay, you've alluded to wine a couple of times. Wine is yet another thing that fascinates me that I felt, it wasn't that many years ago. It seemed like something changed with wine consumption where it was kind of cool for guys to drink it more, right? Like especially younger guys. Growing up, it was sort of these older, sophisticated men who were the ones drinking wine. Like women drank it, but all of a sudden it seemed like we flipped something where it was kind of cool for the guys to do it. But now we're going through this phase where younger ones in particular don't seem as enamored. Maybe they're not drinking alcohol as much, or they're finding some other alternatives, maybe some vodka infused things, what have you. But it just the consumption in general seems to now be an issue for the industry. And we're seeing some, I think you used pain points as an example before, but there are clearly some pain points out there.
Yeah, and so that is the biggest cloud I would say looming over the wine industry, and it's not just U.S. It's across the world. And so generally, as people try to move towards healthier lifestyles, part of that is a lower consumption of alcohol in general, right? The wine space not only has to deal with that, but there's competition from other alcohol industries, right? So for a while there was like the craft brew, right? How many
Hmm.
different craft breweries were there around and going
Yeah,
on, and
every corner.
that it exploded, right? And so it's like, okay, well, like you said, like, is it cool to go hang out at the new craft brewery, or is it cool to have a glass of wine or whatever, right? So that's the thing, right? And you have seltzers and you have other
Hmm.
hard alcohol and everything else, right? And so the other thing that people talked about is just there's still the downstream impacts of COVID and what that really was. There was a time when people were buying wine off the shelf because of it wasn't like toilet paper, but it was the same phenomenon, right? Like people were buying wine because they were stocking up, right? And they were buying other things too. And so that did increase consumption. But the problems that have come from that are people aren't eating, if they're eating out at a nice restaurant, maybe they're not ordering that nice glass of wine like they used to or whatever, right? So there's multiple different things that have impacted the wine industry in terms of consumption. The other thing that's hard is, the almond industry has the almond board, right? And they go out and they're a unified board to help, try to push consumption and all those health benefits and everything else. Wine is still fragmented in that they don't have like a single unifying force that's like, come drink California wine because of this, right? There are
Hmm.
separate organizations that do a good job, but maybe they're focused on, say, just Sonoma County, or they're just focused on, a different portion of the industry. Hey, come to Paso because of this, or whatever it might be, right? And so it's kind of hard when really when you're trying to get consumption up, you're trying to get it, not globally, but you're trying to get the whole industry to move in the right direction. Um, and so it's very difficult when you don't have that unified front. But there's a couple segments of the market, of the wine market, that are doing very well. And not surprisingly, it's low alcohol, low sugar wines, and even alcohol-free wines
Hmm.
that have, you can see the correlation, right, between those health benefits of what we talked about. And that's a segment of the market that's going. And so can wineries pivot and come up with new brand or a new label or whatever it might be to fit that market? They certainly can. They've tried other things that have been beneficial. You can get twist tops very easily for wine now, right? Where that even wasn't a big segment of the market. You have wine in cans. You have other things that are trying to do to make the wine more accessible, right? If you go on a fishing trip with your buddies, you grab a 12 pack or whatever it is, a beer, and you just go, right? It's a lot harder to just grab a bottle of wine and
Yeah.
just go. But if that wine came in, is it because you guys like to drink beer better, or you like to drink wine more? Like, or is it just because the product of how you distribute it is difficult, right? So there are certain wineries that are on the cutting edge of that and doing a good job. And I think that those will be kind of the survivors as you move forward for sure.
So with that decreased consumption, what are you seeing as how that correlates to land values?
Yeah, so the wine market is kind of it depends where you are. It's very diversified, right? So you have vineyards in Napa and Sonoma. The top end could be easily over a $500,000 per acre level, right? You could have a vineyard that's right in my backyard here in Lodi that's going to be in the $20,000 an acre range, right? And why is that? Well, the difference is the underlying land and what the economics of what that vineyard could sell for. You could have grapes in Napa that sell for $10,000 a ton. Whereas here in Lodi or whatever, you might be, 500, 300,
Hmm.
$800 a ton. So it's a massive difference, right? But once again, it gets back to that commodity prices are going to drive land values. And those commodity prices are certainly massively different. That Napa Sonoma world is adult Disneyland though, right? It's not the real world of the wine industry.
Yeah.
You have lifestyle buyers, you have maybe a guy that's from, Silicon Valley and they just want to own a vineyard. And so they're just going to pay whatever price they're going to pay. They're not
Sure.
really worried about the economics, right? And so you have different components that make that market very different. But overall, there has been a general softening of value, especially for your more, commercial type vineyards that are going for sale. I would say winery activity has been better this year than last year. Um, and wineries are coming to the table and looking for some grapes now, which is a good thing. We've had lots of vineyard removals that have happened across the state. And at a unified conference this, gosh, it was the end of January now, so about a quarter ago, we talked about needing more vineyard removals, right? But that to me only addresses one side of the market. That is the supply side. And like I said earlier, and you brought it up, the consumption demand side is something that also needs to be looked at because yeah, you can just look at removing orchard or vineyards and yeah, you're going to reduce some supply. But that's very difficult to do if it costs you, 40, 50, 60 grand an acre to develop a vineyard. That's a lot of
Yeah.
money and it adds
Yeah.
up very, very, very quickly. And so if you're going to remove those orchards or those vineyards, you really need to make sure that you're going to go into a certain segment of the market that makes sense. And if you're in a place like Lodi, you might have soils and climate that you can diversify into something else, maybe a nut crop or something else. But if you're in Napa or Sonoma, you're going to be a vineyard, and you're gonna, because it doesn't make sense to plant anything else on that land. So yeah, it's a great question. I would say that values have certainly softened though, and I think like they're more on the front end of it, as opposed to say walnuts and almonds that are hopefully have hit that kind of bottom and are starting to come out of it more.
I don't want to go too much on wine here, but the one thing that's made me curious about this year in particular is wondering if we're going to have two forces sort of come together. I felt like one of the things that maybe one of the positive things that came from COVID is that we started to celebrate experiences maybe a little bit more. So during COVID, when we had all this government money flying at a lot of people, people gobbled up a lot of stuff, right? So they're
Yep.
buying stuff right and left, doing all kinds of stuff, these home improvement projects that maybe they had thought about, maybe they hadn't even thought about, but they've got all this money coming in and why not? And
Right.
then as we worked our way through that, because we had been cooped up and missing things, missing our friends, missing travel, then we started to embrace the concept of experiences. I thought that would help with wine demand, but then now, we're also in 2025 where people are concerned about recession and are they pulling back on some of those things? And is a wine, is that really a bottle of wine? Is that really a necessary expense for you? And whether you're even truly financially hurting, or maybe you're thinking, well, maybe I'm going to get this one. It's not quite as, as expensive as the other, or I'm going to have one glass instead of two, what have you. But those two
Yeah.
forces kind of counteracting this year intrigue me.
Yeah, and it's very difficult to see. I don't know if one is going to win or one
Yeah,
or what do you want to say, but I've seen and read different things that talk about how alcohol consumption goes down in economic hardship, right? And so if you're sitting around during COVID and you're worried about this or that, well, what might make you feel better? Well, maybe a big glass of wine, right? Or
yeah,
maybe some sort of alcoholic beverage or whatever. Kind of the old saying, drink your sorrows away, right? And so that is a certain thing, but yeah, you certainly wine is a very social thing, right? And it can be something interesting to talk about. The best thing is, no one really sits around and talks about a can of beer, like, oh, where'd this come from, or whatever it is, right?
yeah.
But there's always a story and there's always a romanticism about the wine
Mhm.
industry that some people get into, and it's a certain story that people like, and it's fun to talk about and learn about and whatnot. And so I think that will always be a huge benefit for the wine industry, and they'll be able to lean on that and tell their story in the right way. And so I think that is a very positive thing for that industry to capitalize on. And yeah, that is one of the huge benefits of it is trying to capitalize on that and say how can we meet the consumer where they are, right? How can we that's why I was talking about different packaging, maybe trying to meet them in a better alternative option of lower alcohol or a healthier version of what they really might want. And the other thing is when people start to pull back, maybe they're not buying that more expensive wine, but the beautiful thing about California is you can buy a $3 to $5 bottle and you can buy a $500 bottle, right? So
Yeah,
the top end of the market is usually, I don't want to say it's recession proof, but there's not too many daily drinkers that are doing, 100+ bottle, a night,
sure.
right? Type situation. But if you're in that 10 to $20 bottle range, $25 bottle range, like you're going to capture a big portion of the market, right? Because you're going to maybe capture someone trading down and maybe someone trading up if they're having a good year too.
I feel like I've been peppering you from all kinds of different directions, but there was one more subject I really wanted to get your insight on, and that is, we look nationally that bankruptcies are up. Are they are they significant enough in your state where they have had any kind of impact at all on land values? Obviously, you had a couple in particular that are really huge uh, industries that were impacted here, but is it unfortunately broad enough that it's impacted land values?
Yeah, I mean, it's tough to say. It's not this correction is nothing like what the 80s were when you had, lots of little, farming entities going out and
Yeah,
bankruptcies and all these other things. There is a general correction. Yes, there is pain, at the smaller level, but you're also seeing it at the big boy level too. And so you've seen massive bankruptcies in the wine industry, in the tree fruit industry, and in the almond industry, all of them. And there's been, other foreclosures and things in walnuts and stuff too, right? And so it has definitely impacted the market. Um, each one of those has come with mixed results. The tree fruit industry in general was pretty healthy going into that huge bankruptcy that hit that. And those properties were in some of the best water districts and farming regions in California. And so competitors were eager to gobble it up. And so they did gobble that up. And, that transition happened. And quite frankly, it didn't really miss a beat and it didn't tank values in those areas, right? But that market was very, very healthy. Um, the one that hit the almond industry, it wasn't necessarily in core farming regions for almonds. Almonds can be grown in many different parts of the state, but mostly in the Central Valley is where the vast majority of the production was. And some of these orchards were in areas that weren't as known for growing almonds. And so, yes, those were softer values in those regions, but it wasn't like in the core area. The other thing that the almond industry just like we talked about earlier, they had multiple years of really rough almond pricing. And so you didn't have a huge Rolodex of people wanting to gobble all those things up, right? And in the wine industry, when that one went down, it wasn't as vineyard heavy, if you will, like the assets that came out of that bankruptcy. There were a lot of brands and some facilities and whatnot. There were some vineyards that did get sold and got sold for decent value. But the majority of that was gobbled up by other competitors. But I think in general, the wine industry is, like I said, the wineries are looking to be more conservative. They're seeing this pullback and they're wondering, maybe now's not the time to go on this massive, buying spree and whatnot. And so each one of those segments had different forces that were pushing on it, but it wasn't like it caused a catastrophic drop in land values for sure. I would say just the general economics and fundamentals of each one of those industries was already pushing on values.
I wonder if you can close us out with what are you going to be watching as we proceed through 2025?
Yeah, it'll be interesting to see if almonds can continue their kind of upward trajectory in price. It'll be interesting to see where that segment of the market goes, and if they can get growers a little bit in the profitability section and kind of move things along. We've had a great water year. It's been, I can't remember how many years since we've now had 3 years of at least average or above average rainfall in California. I mean, that's one segment we didn't even touch on, but California water is the most critical portion of investing and owning land in California. And so when we are blessed with having good rainfall, it is an extreme release valve, if you will, for the industry, and it helps with profitability. And so we should be good there. It'll be interesting to see how the wine industry rebounds and if wineries are going to continue to come to the table and what that looks like. And yeah, it'll be interesting to see how things shake out over the next few years. I still think there's tremendous buying opportunities in the market today. My clients are working on a lot of different projects on a lot of different market segments, and a lot of activity going right now. And so if you have liquidity, it's a great time to try to enter the market for sure.
Well, Scott, I appreciate it. You let us deep dive into a lot of different areas. So appreciate you letting us test your insight in all of this.
Yeah, no, thanks for having me. It was fun. We'll do it again sometime.
Appreciate it. Thank you.
All right, thanks.
We hope you'll also check out our profile piece about Scott. It's in the weekly American Farmland Owner newsletter. It's the place where landowners get their news with the insights of industry leaders about what's happening in ag, the successes, the challenges, and what's ahead. Check it out now at AmericanFarmlandOwner.com. Thanks for joining us here, and thanks for caring about the future of our farmland.